The crypto market hinges on one thing as we go into next week, and oddly enough, it does not involve crypto. Hey everyone, hope you're doing well. Happy Friday, Justin here with Crypto Academy. And in today's video, we are going to take a look at one market that is going to influence the entire crypto market next week. So you're not going to want to miss that. And if you guys do enjoy this content, be sure to subscribe to the channel and click that bell icon to get notifications so that you don't miss out. So what is this one market that I'm referring to? Well, it's the S&P 500, but before we get to that, I do want to point out that in yesterday's video, I talked about $1.05 trillion for the total crypto market cap. This was a must-hold level, and sure enough, we're seeing a bounce right from there. Okay, so 1.052 was the level I mentioned in yesterday's video. Sure enough, today's low is 1.051. So pretty much right on the dot, we got the bounce. This is now a must-hold level. In order for this rally to stay constructive from Bitcoin and Ethereum and everything else, the total crypto market cap has to hold above 1.05 on a daily closing basis. That means 8 p.m. Eastern. Okay, we need to see this market continue to close each day at 8 p.m. Eastern above 1.05. All right, so far all is well here with the crypto market in this rally, but the thing I want to talk about today, guys, is the S&P 500. So for those of you who have seen my recent videos, this should come as no surprise that the area just below 4,200 is going to be absolutely critical for the S&P 500. Now, why does this matter for crypto? Well, the entire year, okay, all of 2022, Bitcoin has been following the S&P 500 for the most part. Sure, there have been some deviations here and there for a few days, maybe up to a week, but for the most part, if the S&P 500 sells off, Bitcoin is going to follow. It might take a day or two, but Bitcoin is likely to follow. So with the S&P 500 coming into this massive area between 4140 all the way up to about 4,200. Okay, you can see it with support back here. We have a lot of consolidation down here, lows as well, and then also these highs. Okay, so this area starts right around like 4,140. You could even make a case that it starts down here around 4,100 based on these highs and lows, in which case the market is really testing that area today. All right, but as I've said recently too, this area around 4,200 is also the 50% of the year-to-date range. Okay, so from the all-time high, which was put in right after the year started, okay, so down here to the recent low, you can see where the 50% comes in right here at about 4190. Okay, so we've got the 50% of the year-to-date range. We've got all these lows back here, these lows, and then also these highs. So this is going to be a massive test for the stock market. And again, this is going to affect crypto. Now, I'm not here to predict whether this holds or not. That's not really my job. My job as a trader is to come up with my plan based on whatever the market does. It's not to guess on what the market might do. And that brings me to a really important point that I want to discuss today. So the one thing I see with a lot of traders out there is that bullish and bearish are binary terms for them. And the one thing that I want to get across today is that bullish and bearish should not be a binary thing. Okay, sure, if you're in the start of a bull market like last year, you could have pretty much bought anything and made money. Okay, in that case, yeah, everything is bullish, right? But right now, guys, especially right now that we're in a bearish market and the market is putting in a relief rally, the terms bullish and bearish should not be binary, in my opinion. In other words, you guys may remember from your school days that we have something called a Venn diagram, okay? So think of it like this. Here's our Venn diagram, okay? And this over here is going to be bullish. So this is going to be BL for bullish, and this over here is going to be BR for bearish. Now, what happens a lot of times, and this is what I see so often, where traders get stuck being either bullish or bearish. And it's fine to have a bias. In fact, you have to have a bias in order to place any kind of a trade. If you had no bias ever, then you would never be able to trade. But the issue here is that I see a lot of people going either 100% bullish or 100% bearish. And the much better approach, and this is where I always, try to be, is right here in the middle. Okay, so an overlap of these two. Now, at the moment, if I had to put this in percentage terms, I would say that I'm around like 60 to 70% bullish and around 30 to 40% bearish. All right, so that translates to cautiously bullish. So right now, yes, I do think we could have some more upside from markets, but with the S&P 500 coming into this area around 4,200, not far below that now, I do think that you have to be a little bit cautious. So yes, I'm still somewhat bullish, okay, but I'm also not going to ignore where the US stock market is and also the fact that crypto does tend to follow those stocks. Okay, so if you want to get better as a trader, my advice is to operate more here, okay, in the middle of these two, instead of just saying I'm bullish or I'm bearish, okay? And again, it's fine to have a bias, but you need to be able to balance that with an understanding that you don't know where the market's going to go. And also the market doesn't care about your bias or your trade. The market's going to do whatever it's going to do. And this is why I'm perfectly fine flipping my bias based on what the market does. Okay. Right now I'm cautiously bullish because markets are holding above support. Again, we go back to total, right? It's holding above this area here. And as long as that's the case, then yes, I'm cautiously bullish. If we were to see a close back below this, then guess what? When I'm operating in this area, okay, that means that I start to flip a little more bearish. So maybe I become 60 to 70% bearish and 30 to 40% bullish, okay? And it's a sliding scale all the time, depending on where the market is trading, depending on where each day is closing. All right, so I don't mean to get off on a tangent there, although I probably did, but I think this is really important to understand as a trader and really just an observer at the market, okay? So if you want to get better, try to operate more in that middle ground where it's fine to have a bias, but also be sure to have a balanced approach. All right, so with all that said, guys, here's the bottom line. Going into next week for the S&P 500, for the crypto market, is the market is coming into some resistance, okay? Now, we can see crypto move higher without the help of the S&P 500, but it's going to be imperative to see a break above this if we want to see Bitcoin and the rest of the crypto market really start to move significantly higher. Because if the last 7 months are any indication, if we were to see this next week, okay, and a sell-off from that area, crypto is likely to follow. Now, again, this goes back to that Venn diagram, right? And saying that right now, while the market is above this area down here, all right, the top of this channel right here, then I am going to be cautiously bullish. Now, if we were to see a reversal here next week and it closed back below this area, then that flips, okay? And I start becoming a little bit more bearish, at least in the short term. So right now, we are seeing this relief rally, and I want to make that clear too, that what we're seeing right now from the S&P 500 and crypto, I have no reason to think that this is anything other than a relief rally within a bear market. But the S&P 500 is going to be one to keep a very close eye on as we go into next week. Keep an eye on this area between 4140 and 4200. See how the market reacts here. And again, this channel, okay, the top of this channel that it broke out from yesterday, this is going to be absolutely critical going into next week as well. Okay, so you can see that we have two touches off of this area here. Recently, we got the breakout. So this level is going to be key now to hold, because if it fails and we see the S&P 500 close back below this, then this up here becomes the fake out. And as you guys know, a fake out to one side of a pattern typically triggers an extended move in the opposite direction. Now, if we do see the S&P 500 clear this area next week, okay, so let's say that we do get a break above this area. Next week, a close above it, and then it holds that support. Okay, so a close up here, and then we see a retest and the market can hold. The next key area for this market is pretty obvious here, but the next key area are going to be these highs right through 4,300, maybe just above it. Okay, so some pretty decent room to move if the S&P 500 can take this area out. However, if it fails to do so, we see that rotation lower, we see the close back inside of this channel. All right, and at the same time, you're going to want to keep an eye on the total crypto market cap, keep an eye on Bitcoin and $23,000, because those are going to be must hold levels now going forward. So if we see the S&P 500 start to rotate lower and we see total start to do the same and close back below this level, okay, those are going to be tells that the market is about to pull back. All right, so that's the point I wanted to get across today. And if you take nothing else from this video, just go back to that Venn diagram, like I mentioned, and this is kind of how I operate. Is I'm never, or I'm usually never 100% bullish or 100% bearish. I'm usually somewhere in that middle area, understanding that I might not be right, and also that the market is going to do what the market's going to do. I think it's always a mistake to get too bullish or bearish at any one time. And to be honest, a lot of the calls that you see out there of people saying that the market's going to go to XYZ level, in making those calls, it's really ego driven. Okay. If I'm being honest, it's ego driven. It's so that they can look back and say, see, I told you so. But I think that the much more, viable approach, if you really want to succeed at this, is to maintain a balanced approach, whether you're bullish or bearish on the market at any one time. All right, so that's it for today's video. I hope I didn't go off on too much of a tangent for you, and I hope you did find it helpful. If you did, be sure to subscribe to the channel, click that bell icon for notifications, and also leave your comment below. Happy Friday once again. I hope you guys have a great weekend, and I will talk to you again next week.